Varsha, Kirtika, good evening dear. Yeah. So far whatever I have taught you, all those things are clear, or you have any doubt? Varsha, Kirtika, please let me know.
No, ma'am, no doubt.
Okay. Varsha, what about you?
No, ma'am.
Okay, fine. Varsha, whenever you are not attending the class, are you going through the recorded videos, dear?
Yes, ma'am. Yes.
Okay, fine. Take page number 39. Admission of a partner, page number 39. Okay, just a moment. Kirtika, have we finished this question? That is, which question? Hmm. Okay, I think we have finished. Take page number 39, okay? Take page number 39.
Yes, ma'am.
Yeah. Madhuri and Arsh were partners in a firm, sharing profits and losses in the ratio 3:1. There are two partners in a partnership firm, Madhuri, Arsh. And what is their profit sharing ratio? 3:1. Balance sheet as at 31st March 2019 as follows. So balance sheet is given when 31st March 2019. As I told you, whenever the question starts with balance sheet, first you have to see the liability side. Any distributable item is there. What are the distributable item among partners? General reserve, PL account balance, and suppose workman compensation reserve is there, you have to check for the liability. After paying the liability, if any amount is left, that will be distributed among the partners. In this way, you have to check any contingent liability like that. Employees Provident Fund, never get confused, is not a distributable item among partners. What is Employees Provident Fund? Employees Provident Fund means that amount is kept to pay to their employees. It is not a distributable item. So by seeing the word fund, you cannot distribute employees provident fund among the partners. It is a liability for the business. It will be paid only to the employees, not to the partners. So whenever you find employees provident fund, do not distribute among partners. Keep it aside. If the question asks you to prepare a new balance sheet, you have to show it that in the liability side of the new balance sheet. Please note it down, because children always get confused. By seeing the word fund, they think employee provident fund is a distributable item. So they show it in the credit side of partners capital account by employee provident fund and distribute it. Question will go wrong. It is a liability kept for the employees. It will be paid by the firm to their employees, not to the partners. Note it down. Whenever you find employee provident fund, do not distribute it. It is a liability, will be shown in the new liability balance sheet liability side. Now we will see the liability side of the balance sheet. Madhuri, she is having capital 3 lakh and Arsh 2 lakh. These are the capital. So these capital, where we will write partners capital account, credit side by balance BD, and we will write. Workmen's compensation reserve is 60,000. Whenever you see workmen compensation reserve, go in the adjustment and see anything is given regarding that. You have to, yes, if you see adjustment number 5, it is given claim on account of workmen compensation fund amounted to rupees 70,000. So workmen compensation reserve liability is 70,000. Workers are asking 70,000. And how much reserve is created by the business? 60,000. What is the meaning of this? This 60,000 we can compensate from the reserve. And what about the remaining 10,000 liability? That is loss for the business. So all losses where we show in the debit side of the revaluation account, we show the loss. How you will show? To workmen compensation claim 10,000. It is 70,000 given in the adjustment, no doubt. But already we have created 60,000 reserve. Already we assumed that there may be loss in future. Workers may demand 60,000 up to 60 or below 60. We don't know. But reserve is created. So we can compensate up to 60,000 loss from this. But what about the rest 10,000? Business has not created any reserve. So that 10,000 is a loss. Liability has increased. We will show in the debit side of the revaluation account. To workmen compensation claim 10,000. And if question asks you to prepare new balance sheet, if the question is asking you to prepare new balance sheet, then what you will do? In the new balance sheet, liability side, you will show the total claim. That is how much? 70,000. 70,000 you have to show as the liability, workmen compensation claim. Roshni, good evening, dear.
Good evening, ma'am. Can you tell me the page number?
Yes. Take page number 39. 39. Admission of a partner. 39 page number.
Okay.
Yeah.
Okay, ma'am.
Yeah. Now next. What is next? Creditors. Then employees provident fund. So whenever you see employees provident fund, be clear with it. Please note it down. Do not distribute among partners. Employees provident fund, from the name itself, it is paid to the employees, not distributed among partners. You cannot distribute among partners. Now if you see the asset side of the balance sheet, again you have to see the 3 to 4 items. Anything, for example, if goodwill is there, then what you will do? You have to write off the goodwill. Write off the goodwill means what? Remove the goodwill from balance sheet. How? Goodwill is an asset. It has a debit balance. If you have to remove it from the books, you have to credit it. So you will credit the goodwill and debit partner's capital account. In this question, nothing is like that. Suppose advertisement suspense, deferred revenue expenditure, or PL account balance. If PL account balance in the asset side is given, it means it is loss for the business. So that loss will be distributed among the partners. How? You have to debit the old partner's capital account and credit the PL account. By doing this, the loss will be distributed. Loss means partner needs to pay to the firm. That is why we are debiting partner's capital account. And why PL account debit balance is shown in the asset side of the balance sheet? What do you mean by assets? Anything which will benefit the business, that is only assets. It may be the properties or debtors are also assets, because in future business will get amount in cash from debtors. In the same way, this loss of the business is also asset, because in future partners are going to bear the loss, not the business. Partner will pay the loss to the business. Business will get the loss from partner in cash. That is why it is shown in the asset side. And suppose PL account credit balance means in the balance sheet liability side PL account is shown. Again, why? Because these are the profits earned by the business. Now business is going to pay to the partners. That is why it is liability for the business. If business is going to pay anything to outsider or the owner, it is liability. But if business is going to get anything, receive anything from outsider or partner, it is asset for the business. So you should understand why debit balance of PL is shown in asset side of the balance sheet and why credit balance of PL account is shown in the liability side. There is a logic behind this. I hope it is clear. Roshni, Kirtika, Varsha, it is clear to you?
Yes, please.
Yeah, focus on concept. You will never forget. No need to by heart anything in accounts. Okay, fine. Now again, machinery 4,70,000 given, investment 1,10,000, debtors 1,20,000 and provision already created. Less provision for doubtful debts 10,000. After reducing provision in the outer column 1,10,000 debtors. Stock 1,40,000, cash 30,000. On 1st April 2019, they admitted Jyoti into partnership. Okay, Jyoti is a new partner coming into the partnership business for 1/4 share in the profit of the firm. So, Jyoti is coming for how much? 1/4. Jyoti is admitted into the partnership for 1/4 share. Jyoti brought proportionate capital. As I told you, there are two cases of adjustment of capital in admission of a partner. A quick revision. In last class, we have seen the detailed explanation. Quick revision I will give. What are that two cases? First case, in the question, you will find the share of the new partner for how much he is coming and the total amount of capital brought by the new partner. And they will tell you to adjust capital of the firm in new profit sharing ratio. So in that case, what you will do? Very easy. Suppose C is the new partner, for example, and C is coming for 1/4 share and bringing 50,000 as his share of capital, for example, and they are telling you that total capital of the firm will be adjusted in new profit sharing ratio. So for this, first new profit sharing ratio should be given in the question. If you don't find new profit sharing ratio, you have to calculate new profit sharing ratio as working notes. Then share the total capital of the firm. Now how you will calculate total capital of the firm? Very easy. Suppose the new partner comes for 1/4 share and brings 50,000. You write the capital brought by the new partner, that is 50,000, and multiply by reciprocal of his share. For example, new partner is coming for 1/4. Reciprocal of 1/4 means 4/1. Suppose new partner is coming for 3/4. Reciprocal of his share 4/3. He is coming for 1/5. 5/1. For how much share the new partner is coming, you have to make the reciprocal and multiply by the total amount of capital he brought. By doing this, what you will get? You will get the total capital of the firm. Once you get total capital of the firm, very easy. Suppose we are getting 2 lakh rupees. This is only example. Suppose total capital of the firm is 2 lakh. By doing this, then you have to distribute 2 lakh in the new profit sharing ratio. In new profit sharing ratio, the new partner will also come. Suppose the new profit sharing ratio is 1:1:1 or 1:2:1, whatever. You just distribute this 2 lakh in new profit sharing ratio. After doing that, what you are going to do? First, you will prepare revaluation account. Then you will get some profit or loss by preparing it. After that, partner's capital account you will prepare. So, normally, if adjustment of capital question is not there, what you will do? Normally, you will prepare partner's capital account. You will do the balancing part. It will fall like to balance CD and you will write the balance CD. But if it is adjustment of capital to balance CD in partner's capital account, debit side, you will write the new capital. You have calculated na, the new capital that you will write to balance CD. And after that, what you will do? After writing to balance CD, you will do the balancing part. So when you do the balancing part, sometime debit side the balancing figure may fall, sometime credit side balancing figure will come. So what name you will write? By cash or to cash if the question is silent. But if the question tells you that the adjustment of capital is to be done through current account, if the balancing figure falls in the debit side of the capital account, you will write to current account. If balancing figure falls in the credit side of the partner's capital account, you will write by current account. Whichever partner's balancing figure is there, you have to write their name and current account. Understood? This is one case of adjustment of capital. What will be the second case? How you will identify whether adjustment of capital is second case or first case? If it is second case, now we are going to do the sum for second case. After reading all the adjustment, going through the balance sheet, going through the question, the line will be like this: proportionate capital. The new partner is bringing proportionate capital. What is the meaning of this? In second case, it is very easy. You will know the new partner's share. For example, he is coming for 1/5, 3/4, 2/5, whatever it will be given in the question. But the new partner's share will be missing. How much the new partner is bringing? His share of capital. Yes, Harish. Good evening, dear.
Mom, your voice is. Good evening, Mom. Mom, your voice is breaking.
My voice is breaking. Is it breaking for all?
Yes, Mom.
Kirtika, Roshni, Varsha, for all? My voice is breaking?
No, Mom.
Okay. Harish, I think it is network issue on your side, dear. Please check the network.
Yes, Mom.
Okay. Take page number 39, Harish. Page number 39. So what will be the second case? You have to calculate the new partner's share. That is only adjustment of capital. Now how you are going to calculate the new partner's share? How much he is bringing his share of capital? Again very easy. Prepare revaluation account as you prepare. Then go for partner's capital account. Write the balance BD from the balance sheet. Whatever balance of capital is given, you just write it down as by balance BD. Then whatever revaluation profit or loss you got, you write it down. If any distributable item is there, write it down. All these things you know how to prepare revaluation account, do it. After doing, what you are going to do? Normally as you do, you have to calculate balance carried down to balance CD. Normally calculate and write it down. Now write it down whatever balance you got to balance CD. But you will be able to write only two partners balance CD, that is old partners balance CD. Why? New partners capital you don't know, you have to calculate. That is only adjustment of capital, the second case. So how you are going to calculate? Suppose the new partner is coming for 1/4 share. Now what you will do? Working notes you have to write, let the total share be 1. Then remaining share equals to 1 minus new partner's share. For example, new partner is coming for 1/4. 1 minus 1/4. So remaining share equals to 3/4. Then what you will do? The to balance CD, whatever you have written in partner's capital account, that is the balancing figure, you have to add the old partner's capital. That is to balance CD of A plus to balance CD of B. Suppose A and B are old partners. You have to write their balance CD. Together, add it. And suppose the amount comes 5 lakh. For example, then that 5 lakh is for how much share? Suppose I said that 1 minus 1/4. So 3/4. That 5 lakh capital is for how much share? 3/4. Now, if you want to know total capital of the new firm, what you will do? The same process. 5 lakh is for 3/4. So, if you do the reciprocal of the shares of the old partner, you will get total capital of the new firm. 5 lakh into 3/4 reciprocal, 4/3. Suppose 1/5, 5/1. In this way, you have to do. By doing this, total capital of the firm will come. which equals to capital of all the three partners. And you now know the new partner's share it will be given in the question. Suppose the new partner C is coming for 1/4. If you know total capital of the firm, easily you can multiply his share. For example, new partner's share is 1/5 or 1/4. Just multiply it, you will get the new partner's share of capital. Then write it where two side you have to write credit and debit of partner's capital account. Why? Whenever the new partner brings his share of capital, what is the journal entry? Bank or cash account debit to new partner's capital account. So first time you will write in the credit side by bank or cash, and the new partner's amount column, whatever his share of capital he brought, you will write. Now again in the debit side to balance CD, the new partner's amount column will be empty. There you have to write the balance CD. That is the same amount of capital which he brought. Understood or any doubt so far you are having? Harish, Kirtika, Roshni, Varsha, any doubt? Okay. Harish, now my voice is clear to you?
Yes, ma'am.
Okay, fine. So on 1st April 2019, they admitted Jyoti into partnership for 1/4 share in the profit of the firm. Jyoti, she is the new partner. She is coming for 1/4 share in the partnership firm. Now they are telling Jyoti brought proportionate capital. Jyoti brought proportionate capital means this is the second case. We don't know Jyoti's share of capital. That we have to calculate. And 40,000 as her share of goodwill premium. So she is bringing 40,000 as her share of goodwill. Goodwill she is bringing in cash. We know the amount of goodwill brought by the new partner. It is 40,000. So we must calculate sacrificing ratio, because goodwill is always distributed among old partners in sacrificing ratio. The following were agreed upon. Provision for doubtful debt was to be maintained at 10% on debtors. So in adjustment they have given provision for doubtful debts needs to be maintained 10% on debtors. You have to see how much the debtors, and this provision for doubtful debts is a very important concept. Whenever in adjustment they are asking you to create 10%, 5%, 2%, whatever percentage, you have to create provision on debtors. Debtors means not the outer column given in the balance sheet. Always remember or write it down. You have to calculate on debtors means sundry debtors given in the inner column of the balance sheet, asset side. Here it is 1,20,000. In adjustment they are asking you to create 10% provision. That 10% provision you have to calculate on 1,20,000, not on 1,10,000. Don't get confused. These are the silly things which students make mistakes. So write it down please. Whenever in adjustment question tells you to create provision 10% or whatever percentage on debtors means inner column, that is debtors 1,20,000. Not this outer column 1,10,000. Never get confused. You have to calculate on 1,20,000. 10% of 1,20,000. Now stock was undervalued by 10,000. What is the meaning of this line? Stock was undervalued by 10,000 means whatever stock shown in the asset side of the balance sheet. Here it is 1,40,000. Undervalued means business has shown 10,000 worth stock less. So this is a mistake. Okay, undervalued. 10,000 stock is less shown in the asset side of the balance sheet. Means the business is having stock worth 1,40,000. But in the balance sheet they have shown undervalued. They have shown less 10,000. It is 1,40,000. So the value of the stock is more. Now you have to rectify the mistake. How you will rectify? You have to show stock more by 10,000. Assets are increasing. Whenever any asset increases, you have to debit the asset, and increasing the value of asset means profit for the business. So you have to show in the credit side of the revaluation account. Buy stock 10,000. Stock is more by 10,000. Undervalued means stock is more by 10,000, but they have not shown, they have shown less value of the stock. That is the meaning of stock is undervalued by 10. It doesn't mean that you have to show on the debit side. It is not a loss. 10,000 is the profit, but we didn't show it in the asset side. We have shown less by 10,000. That is the meaning of this line. Understood? Please try to understand and write it down, whatever I am telling you, please. Now, next adjustment. An old customer whose account of rupees 25,000 was written off as bad. Now, what is the meaning of this? An old customer means debtor. Old customer for business means debtor. And the debtor needs to pay 25,000 to the business. Was written off as bad means previously the business did not get from one of his debtor as 25,000 rupees. So when we don't get any amount from debtor, what is the accounting term we use? We tell that debtor as bad debts. It is a loss for the business. So what will be the journal entry we would have passed earlier? Bad debts account debit to debtors. We must have reduced debtor by 25,000. Since it is a loss, we are not going to get from debtor. We must have written off. So we must have passed journal entry bad debts account debit to debtors account. Now what they are saying? Paid 15,000 in full settlement. After few years, the debtor who didn't pay 25,000 earlier and has become bad now came to the business. Maybe he is a good person, noble person. So he said to the business, during that period my financial position was not good, so I was not able to pay you 25,000. Sorry for that. But after 2 to 3 years he may come, he may say, now I am better, I am better in my financial position, so I would like to pay 15,000. Paid 15,000 in full settlement. Now he is paying 15,000. But still he is saying only 15,000 I would be able to pay you, not more than that. So it is income for the business. How it is income? Already we have recorded in our books it's a loss. After few years we are getting some amount unexpectedly. So obviously it is income. Bad debts recovered. Whatever loss we have written in our books, now we are recovering it. So whenever any income is there, we have to write in the credit side of the revaluation account. By bad debts recovered 15,000. Any doubt in these adjustments so far? Any doubt? Please ask me. Harish, Kirtika, Roshni, Varsha, any doubt you are having in these adjustment?
No, ma'am.
Okay, fine. Okay. So now next. 20% of the investment were taken over by Arsh at book value. Now what is the meaning of this adjustment? 20% of the investment. So first check the investment value, asset side of the balance sheet, 1,10,000. They are asking that 20% of the investment, okay, whatever investment we are having, 20% of 1,10,000 will be how much? If you calculate 20% of 1,10,000, 22,000. So this 22,000 worth investment, who is taking? Arsh. Arsh is the old partner of the business. He is taking at book value. He is taking means he is saying that I will take 20% investment. I want 20% investment. So I will pay you. So 22,000 investment is taken by the old partner Harsh. Now think, if a partner is taking any asset, think in this way. If any partner takes any asset of the business, what will happen? Business is having partner's capital account. As I taught you, if business needs to pay anything, business will credit their capital account, partner's capital account. Suppose partner needs to pay anything, business will debit partner's capital account. In this way, the accounts are maintained by the business partner's capital account. Harish, you are telling something? Okay.
No, ma'am.
Okay, fine. Now, in this case, who is going to pay? Partner is taking investment of 22,000. That is 20% of investment. 1,10,000 means partner will pay 22,000 to the business. So what will happen? Business will debit partner's capital account. At the same time, investment worth 22,000 also will be reduced from the asset. So when you prepare any like new balance sheet, total investment is 1 lakh. How much? 10,000. From 1,10,000 the partner has taken 22,000 investment. So remaining investment only you will show in the assets of the new balance sheet. Next, claim on account of workmen compensation fund amounted to 70,000. We have discussed earlier. Already reserve is created for 60,000, but now the liability is for 70,000. So out of this 70,000, 60,000 will be compensated from the reserve already created by the business. But what about remaining 10,000? It is loss for the business. 10,000, no reserve is created. Liability has increased. Loss we will show in the debit side of the revaluation account. To workmen compensation claim 10,000. And in the new balance sheet, if we are preparing, question asks you to prepare, you will show on the liability side how much? 70,000. You have to pay 70,000 to the workers in future. So workmen compensation claim 70,000 in the liability side of the new balance sheet you will show. Creditors included a sum of 27,000 which was not likely to be claimed. Now what is the meaning of this sentence? Creditors shown in the old balance sheet. How much? Creditor will come in the liability side, 1,90,000. Out of those creditors, 27,000 creditor are not likely to be claimed, means they are not going to ask you. Business needs to pay amount to the creditor. Now 27,000 creditors are not going to claim, means business no need to pay creditors worth rupees 27,000. Again it's a profit for the business. Liability is decreasing. 1,90,000 is the liability for creditors. Now out of that 27,000 no need to pay, means 27,000 is the profit for the business. No need to pay to the creditors. Liability decreasing. So where we will show? First we have to show in the credit side of the revaluation account. It is profit. So by creditors 27,000. And if we are preparing new balance sheet, we will show in the liability side 1,90,000 minus 27,000. Whatever amount comes, we have to show in the outer column. Next, prepare revaluation account, partners capital account and balance sheet of reconstituted firm. They are asking you to prepare revaluation account, partners capital account and balance sheet. They are asking you to prepare. So revaluation account, debit, credit, particulars amount. So to workmen compensation claim 10,000. I taught you how it came. To provision for doubtful debts, sundry debtor how much? 1,20,000. 10% of that, how much it will come? If you calculate 10,000, 10% of 1,20,000, it comes 12,000. But if you see the old balance sheet, already old provision is created. Provision for doubtful debts how much? 10,000. What is the meaning of this? When you see old provision 10,000 means already the business has booked the loss. Business thought that in future 10,000 worth debtors may not pay us, so we may create provision to compensate the loss. So they have already created provision 10,000. But the adjustment tells you to create 10% provision. So that 10% provision comes to 12,000. Now the provision should be 12,000. Meaning of this is provision should be shown in the new balance sheet 12,000. Already old provision 10,000 is created. So only 2,000 more provision we need to create. Okay. So that 2,000 more will be a loss for the business. Anyways, creating provision is loss for the business. What is the meaning of provision? We are not going to get from debtors. We are expecting that debtors will not pay us 12,000. Already 10,000 loss we have booked. So more 2,000 again we are expecting loss. We are not going to get. And if we are expecting any loss and booking the loss means it is to be shown in the debit side of the revaluation account. 2. Provision for bad and doubtful debts 2,000. Have you understood why we are writing 2,000 provision in the debit side of revaluation account even though it is coming 12,000? Yes? Kirtika, Harish, Rosni, Varsha, are you able to understand? Fine. Now if you see in the credit side of the revaluation account, by stock I told you that undervalued, we have shown less stock by 10,000. We have to show more stock by 10,000. So asset is increasing. That is why it's a profit. Whenever any profit comes, we will show in the credit side of revaluation account. By stock 10,000. Then by bad debts recovered. A bad debt has happened for 25,000 earlier. Now the debtor is paying how much? 15,000. It's bad debts recovered, income for the business. Revaluation account, credit side we will show. Creditors 27,000, likely not to be claimed. Creditor are not going to ask for 27,000. Again, it's a profit for the business. Liability decreasing. In the credit side of revaluation account, we will write by creditors 27,000. Then what? You have to do the sum total of debit and credit side. In this question, credit side is more. Whenever credit side is more than debit side, it means profit. Suppose debit side is more than credit side means loss. So here credit side is more. So profit for the firm. To profit on revaluation. Who will get? Old partner, old ratio. Whatever revaluation profit or loss, old partners will get. No new partner. New partner will not get anything from revaluation account. So here, who are old partner? 2. Who are they? Madhuri and Arsh. Please write the full form. I have written MA. You don't write MA. You have to write Madhuri. Arsh, full form 30,000, 10,000. Profit on revaluation is 40,000. Distribute in the old ratio. What is the old ratio given in the question? 3:1. So 40,000 into 3 by 4, 40,000 into 1 by 4. In this way. Then they are asking you to prepare partners capital account. First, whenever you start, first all the partners, first you have to see how many old partners. 2 old partners, 1 new partner. So amount column you have to divide into 3 parts for the 3 partners, 2 old and 1 new. Debit, credit, particular amount, particular amount. Madhuri, Arsh, Jyoti, Madhuri, Arsh, Jyoti. First you have to write the balance from balance sheet, capital balances given in the liability side of the old balance sheet. By balance, BD, old partners, old capital balance. Madhuri 3 lakh, Arsh 2 lakh. And we don't know about Jyoti, proportionate capital Jyoti is bringing. We have to prepare working notes and calculate how much Jyoti is bringing share of capital.